So realization account. Realization account. Somewhere there. Shillings are in, they're operating in thousands. So have them there in thousands. Have it in thousands. That is our last question for reconstruction. So how do we start? We start by debiting the account with assets at their book values. So bring the book values of the assets. Kindly note, you should not close intangible assets. Other assets, bring them there. So land and buildings. So land and buildings. Do people think we need this electricity here right now? Hebu tuzime ndio tujue. Hiyo mtaniona kweli? Online basi iko sawa? Because online, are you able to see? Because when I say perfect means it is clear. Yeah, that is okay with them now. So land and buildings. Land and buildings is 2134. 2134. 200. Then we have plant and machinery. Plant and machinery. Book value. Book value is 1591. 1591. 200. Then we have furniture and fixtures. Furniture and fixtures. How much is this? 594. 600. Investments. Investments. Gap. 345. Goodwill, no, sure. Even patents, even preliminary expenses. Those ones you write them off to ordinary sundry. I want you to bring here the two items. One, the preference dividends in what? In arrears. So preference div in arrears. We bring them here as part of the losses which were brought forward. So can you check for me which notes? Just check the note, you will be able to see. The note talking of preference dividends in arrears. Note 2. So note 2, preference dividends in Swara were 2 years in arrears. So go to the capital structure. Go to the capital structure. Check the percentage of preference. Then we multiply. So this is 8%. Times how much? 3.6. For how many years? For 2 years. So 8% of 3.6 times 2 years. That one comes to how much? 576. Thank you. The solution cost 576. The solution cost. Credit the cash book, debit realization. So can you check? They will tell you that the new company paid the solution expenses on behalf of the old company. So which note is talking about? It about the second last, third last, note 9. So note 9. Trigger paid 30 million to Swara to pay for the resolution what? Expenses. So with the resolution cost, credit the cash book, debit realization account. So cash book, that is patch. That is patch. Good. Close realization, credit realization with current liabilities. So check. No? Without saying liquidation. What are you saying? Yes, you can write solution without writing cash flow. There is no problem at all. Preliminary, all intangible assets are written to ordinary during external years. Credit the account with all the current liabilities at book values. So trade payables, how much? 876. Debenture interest. Yeah. Oh, sorry. Capture current assets. Thank you, no problem. We bring them. 144. So we skip the current assets. Current assets, we have which ones? Inventories. 975. Receivables. 858. Cash at bank. 271,200. You bring all the assets except intangibles. So something like that. Sawa. Then tukishafika hapo, you leave realization hanging, leave like 1, 2, 3, 4 lines. Then let's go to the next account. Next account they want is which one? Which account do they want? Trigger limited account. Hiyo kwanza ndio inakuanga mwisho, sio? So what we can do, just come up with it, but we leave it hanging. Just draw trigger limited. That one you should complete once you have done all other accounts. So right there, trigger limited account. Trigger limited account. Trigger limited account. Leave that one hanging there. There is nothing you can do. The only thing you can do with that account, you say it will be debited with the purchase what? Purchase consideration. Purchase consideration. So that one even we don't know as per now. So that account, just leave it hanging. We'll proceed to the rest. Until you close all the books of the old company, you'll be able to close this account. So go to the next required. The next required is which one? Huh? Ordinary sundry. So right there, ordinary sundry members. Now, current liabilities are part of the debentures. Now, in quotes, we classify non-current liabilities. Those debentures as providers of capital. So they're always compensated. They're not taken over. They are well, yes. So have there ordinary shareholders, sundry members. Sundry members account. Ordinary sundry members account. So thousands there. So ordinary sundry, that is the account where we finally settle. The account where we finally settle the ordinary shareholders. So you just check how much were they claiming from this company and how are they compensated. Very simple. So what was their capital? The capital of ordinary ordinary share 3 million. So bring it here. Balance brought down. Balance brought down. Balance brought down. They were claiming 3 million. Was there share premium? Check. If there is share premium, all those reserves are part of their claims. Was there share premium? No. If it was there, just indicate. If it was there, kindly remember to capture. Was there evaluation? Was there evaluation? Hapo kwa equity too? No. So if it was there, remember to capture. We had retained earnings. However, the retained earnings, the profit account was negative. Negative profit, we call it what? Accumulated losses. So debit the account, reduce their claim. So the accumulated losses, bring it here. So accumulated losses. Accumulated losses is the negative retained earnings. How much is this? 25, 20. 25, 20. Give us there. Then intangible assets. Intangible assets which were not taken over. Debit them to reduce their claims. You cannot say you have goodwill at the company. Why are you in distress if unajisifu? So things like goodwill, bring them here. So goodwill, they were claiming how much? 390. So debit their account. There. There was patents. So patents. This is 240. There was preliminary expenses. Preliminary expenses. Reduce their claim. That is 100, 800. So that is how you start the ordinary account. You start with what their capital, which they are claiming. Why am I saying they are claiming? The company is being closed and they should be compensated for the capital they invested in that company. But there has been some losses. Why we should suffer those losses? While you are about even these intangible assets, we cannot be there when we are closing. Then now they will get something from the new company is called Trigger. So Trigger will compensate them. So upon compensation by Trigger, you debit the account also to reduce their claim. So you say from Trigger, so check additional information where they are directing us, how Trigger compensated them. Kindly check to confirm. Which note? Note 5. Nasikia watu wakisema note 5. Note 5. One ordinary share of shillings 10 each credited at 5 in Trigger will be issued for every 2 ordinary shares in Swara. The ordinary shareholders will, however, pay the balance. Kulipa balance in the baadaye. So that's how they compensated. So the ordinary shareholders in Swara, they were given ordinary shares in Trigger. So from Trigger, we got ordinary share capital. We got ordinary share capital. On what basis? On what basis? They were getting what for what? Ruth, they're getting what for what? One for every 2. So they are getting one ordinary from Trigger for every 2. How many ordinary are we having? Because we are getting 1 for every 2 we have. How many ordinary are we having right now? 300,000. Eh? Because 3 million divided by the par value, which is 10. So we have 300,000 ordinary shares. But the shares they are giving us will be credited at what price? 5. So you multiply by shillings 5. You multiply by shillings 5. You get 750. So the balancing figure, you will close to realization account. So can you balance for me that account? Balance that account. No 10. Nasema nini? Baadaye tukishafika kwa tija. Sasa bado tunafunga swali. Tukishafika huko. Tumeelewa? So how it is balancing? Moha, I hope Mohammed umejibiwa na Aquilite. I hope umeona. It's balancing with which side? Credit side. So you say to realization. A book name 1 with how many zeros? 1 with 3 zeros. 800. Like that. So close it on the debit of realization. Close it on the debit of realization. Close that to the debit of realization. So go to the debit of realization. Then you bring there ordinary sundry. Ordinary sundry. One. How do you read this? Check. That is not our answer. And then let's go to this other one. Let's go to this other one. The next required is which one? Preference. No. And let's go to preference. The 8% preference. We want to see how they were compensated. We want to see how they were compensated. So right there, 8%, 8% preference sundry. Preference sundry members account. Preference sundry members account. So those people, this preference, they only claim two things. They always have two items to claim, which I want to tell